Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. All right, local shares heavily battered today as the benchmark retreats for a fourth day. Not so good return from that holiday break, with the index plummeting 3.5%, pulling shares back below the 7,000 level over the past 4 days. The index has erased some 6.4%. The main index capped off the session at 6,947, its lowest close yet since October this year, back when we still had that Delta-driven surge in COVID infections, but a new variant here spooking investors. Concerns over the Omicron variant prompted government to maintain virus curves its status quo for NCR as alert level 2 stays until December 15. The country also remains dead last in Bloomberg's COVID Resilience Ranking of 53 economies, noting sluggish rollout of vaccines. We'll give you the palace's reaction on that later in the show. But one agency is more upbeat here for the Philippines. S&P raised its growth forecast for the Philippines to 5% this year. That's from the previous 4.3% projection that they had back in August, but it's still warned of Omicron's possible risk to recovery, not just here, but for the entire Southeast Asia. But also a quick glance here at our leaderboard would show that it's really a sea of red today, with Bloomberg pulling down the most, declining more than 10%. SM Prime and Metro Pacific both shedding more than 6%, with Metro Pacific falling the most in 8 months to 3 pesos and 81 centavos a share. Lots of stocks here with hefty losses, from Jollibee to the likes of Robinson Retail, BDO, and even Globe. Now, only 3 stocks managed to buck the sell-off. You have Meralco gaining the most, close to 3.5%, and JG Summit and LT Group both increasing by 0.9%. Lastly, let's have a quick check on one lender here, Union Bank, which seems to have gotten the nod here from Citi. Sources told Bloomberg that Citigroup has chosen Union Bank as its bidder of choice to acquire their Philippine assets. Both lenders plan to negotiate the terms and structure of a deal with a goal to come up with an agreement in the next few weeks. Sources say that the sale could actually amount to as much as $1 billion. No assurance, though, that the deal will be concluded. This development came in a few minutes before close. Let's see how this is going to affect Union Bank, which for today joined the sell-off, dipping 2.5% to 104 pesos and 30 centavos apiece. Here are other headlines we're keeping our eyes on. Malacanang says the latest Bloomberg report, which places the Philippines dead last in terms of COVID-19 resilience, lacked consideration for a country-specific context. Acting presidential spokesperson Carlo Nograles says that the 53 economies included in the report have different COVID-19 experiences and strategies. For the November snapshot, Bloomberg says a key barrier to improving the Philippines' scores is a country's relatively low vaccination rate, with the government having given out less than 100 COVID shots per 100 people. But for the palace, Bloomberg should have taken into consideration the key interventions that enable the country to manage its COVID-19 situation while also safely reopening the economy. Nograles cited a few positive results from government's efforts, including active cases falling to the 400 level by end November, positivity rate dropping to its lowest since April, and the country hitting the 5th highest single-day vaccination rate worldwide at 2.5 million. Now, the country's debt pile continued its rise in October, hitting a new record high of 11.97 trillion pesos. This shows a continuous climb from the Duterte administration's debt program for the entire year, which is set at 11.73 trillion pesos. In the first half of the year alone, the debt load has already accounted for 60.4% of GDP, reaching the 60% ceiling that is deemed manageable by global debt watchers. The Treasury says the additional borrowings in October was mainly due to sale of government securities as the country seeks to pay for its pandemic response. And the detection of the Omicron variant overseas derailed the country's plans to loosen border restrictions, at least for non-visa green list countries. The tourism department says the government has suspended relaxed testing and quarantine protocols for foreigners until December 15, as the country tightens its border control to prevent the entry of the Omicron variant. Travelers from non visa countries under the green list had previously been allowed to enter the Philippines with only a negative swab test result and a vaccination card. But now they too have to undergo facility based quarantine, like travelers from red and yellow list countries. Still, Tourism Secretary Berna Romulo Puyat is confident that the country will be able to better handle the potential entry of the new variant now that more Filipinos have been vaccinated against COVID 19. Speaking of the Omicron variant, just how much of a threat is it to the country's recovery? Let's get insights from economist and pamantasan ng lungsod ng Maynila President Emmanuel Leyco. Prof. Leyco, good afternoon. Thank you for joining us again.
Thank you. Good afternoon, Jes, and thank you for having me back.
Our pleasure. Of course, let's get right to it. How worrisome is the Omicron variant? How much of a risk are we talking about here?
I think it's a real threat because if you remember what happened to us during the Delta deluge on the Philippines, got locked down. And I think the talk about the new variant being more destructive, I think we should consider it as a real threat. And therefore, if the new variant creates more trouble for everybody, the economy definitely will be a major casualty here.
Okay, we've seen the level of containment that we had during the Delta-driven surge. What level of measures or restrictions could we afford to return to once the Omicron variant enters our borders?
Well, actually, the decision to be more restrictive in terms of the entry of people coming into the Philippines, I think that's a good move. But I think just like what we've been hearing, the entry of the new variant is just a matter of time, and we should use that time to be able to prepare better. I think we need to have good screening. We need to have our facilities more ready. But most of all, I think we should also make sure that the vaccine rollout continues. Although there is already there's already talk that the new variant may render the vaccines that we have now basically ineffective. But I think we know better. We should roll out the current vaccines.
Okay, we're taking at least the word of our health authorities. They're expecting the variant to at least enter maybe a first half or first quarter of next year. And of course, much word has been said about the possibility that we're going to return to pre-pandemic growth next year. Is the entry of the Omicron variant going to derail that?
I believe so. I think if we are not able to control the entry of the new variant to the country, and we go haywire again, just like what happened during the Delta variant, I think the recovery is definitely will be compromised.
Mhm. Speaking of growth, you have S&P already really upbeat here on the country's growth prospects for full year 2021. What are you seeing?
Well, you mentioned earlier that the Philippines lagged behind. We actually were the last in the ranking of Bloomberg's COVID-19 resiliency
Mhm.
ranking. In a way, I think we have to take that as a reality because the measures that are being considered by Bloomberg are very good. For example, vaccine rollout is a major factor. So if we are not able to do a good rollout for our vaccine, our growth rate will be compromised. However, when I was considering the countries that are doing better in the Bloomberg ranking, given the fact that we have a lot of uh, overseas Filipino workers in those countries, I think we can even benefit from the higher ranking of those countries. We have like 10 million Filipinos overseas, and I can already see the remittances returning. The remittances are picking up. In fact, I believe that our remittances will go back to the same level as in 2019, given the rates that the countries are picking up in terms of the OFW remittances. So I think we will still achieve the low end of the forecast, the projection. So probably up to about 5% would be a good projection at the end of the year for the total GDP growth rate for 2021.
So at least hitting that government target 5%, that's what you are seeing for full year. Now you
I
mentioned,
I
okay,
believe
sure.
so. I believe so, and I think that will be fueled by the OFW remittances. Considering that we are a
Mhm.
consumer-oriented economy, more OFW money coming into the country will mean that we are able to sustain our consumption. However, if the new variant also affects countries where many Filipinos are, or, like in the U.S. and OFWs in Europe and the Middle East, if this becomes a global uh, lockdown once again, I think there's no way that we can see an economy picking up this year. But that's like 2 more months. I hope we are able to weather the storm in the last 2 months of 2021.
Okay, of course. Again, that's at least is an optimistic outlook here for the country's growth levels for full year 2021. But also, we have another figure coming in earlier in the day, or which came in earlier in the day. Record high debt already exceeding this year's program. Should we be worried?
Well, we should be very, very worried, considering that the economy is already taking a big hit, and the government is borrowing a lot of money. Debt service will become a major problem. That should be a headline story, especially for those who are aspiring to become presidents, senators. I think they have to offer a program. How will they manage the country's debt? Considering that social services need to be attended to, education, healthcare, and with the shortage of government funds coming in, tax revenues declining, I think that will be a major cause for concern for the country.
Do you see the country's debt program at least taking a bit of an easing in 2022?
Well, that would depend on how the economy picks up. If we get more tax revenues, I think we can ease up. But the rate it's going, I think we will continue to pile up more debt even after this calendar year.
All right. Thank you very much for your insights this afternoon. Again, we have Professor Emmanuel Leyco, an economist and the president of the Pamantasan ng Lungsod ng Maynila. Thank you very much, Prof. Leyco. Stay safe.
Thank you.
And those are the biggest stories of this trading day, December 1st, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.